Hi all, Joshua Steger here from ETFadviser.com.au, and today we're going to cover off on what happened this week in ETFs in Australia and what we can expect for the week ahead. So we've got the email newsletter out today to clients, and you can see it's pretty significant in terms of what we're covering. I mean, if you're looking at the general indexes, I don't think you're going to see much in terms of opportunity here. I don't think there's much of an edge for bulls or bears at the moment. And I think volatility is going to pick up over the next couple of weeks. So in the main indexes, as I said, you're not going to get much action, but outside those indexes, there's some really good themes setting up. So I'll cover off on some of those, but I'm not going to give you all our best ideas because that's for subscribers. So if you're interested, look at signing up. But yeah, we'll cover off. So we'll start here today with the ASX 200 index, and you can see, you know, we've had that V-shaped rally, and now we're coming up to those previous highs, and we're seeing a bit of selling. There's, you know, a bit of higher volume selling, and as I said, we can expect the volatility to pick up for the remainder of this month, particularly in Australia with the end of financial year. And we've got the reason for sell-off, so there's obviously more war news in the Middle East, so that's creating some issues. One thing I want to say about the V is, and these are some really good charts from another advisor that I follow, and so he's basically saying history demonstrates that sharp rallies after a 20% pullback, rarely does the market blast through to previous all-time highs without any trouble. So he's given some good examples here. 2019, you can see that correction gets up to previous highs, and then, you know, it has to consolidate before it can get going again. Same in 2010, so this is the S&P 500 again, rallied up to the highs, settled in, and then started to move out. Same case, 1998, pullback, rally, previous highs, had to settle in, consolidate before it could get going, and 1990 as well. So same, even though it was at those previous highs, it had to bounce around quite a lot until it could get going again. So I think that's exactly what we're going to see, you know, for a lot of these V-shaped rallies. So the Aussie market's one of them at the moment, and it's playing out that way. We'll look at Europe as well. I mean, that's pretty much playing to that textbook of those examples there in terms of, you know, there's the previous high, there's the tariff sell-off, there's the rebound, couldn't get through, and now, you know, just last week, you know, had 3 down days. Those red bars are starting to pick up, which is showing that selling coming in. So yeah, I think we're going to have to do a bit of chop before we can find our way, you know, up or down from here. So just back to the Aussie market. So this is the X20, which is really interesting. So this is an ETF, but I use it as an example here just to show what's happening outside the big 20 stocks. So you've got the ASX 200, remove the top 20 stocks, and we're looking at the 180 that are left, and you can see this is actually really quite strong into new all-time highs this week. So that's a good sign for our market that it's not just the big cap top 20 stocks that are moving, and this is actually looking a lot stronger than, you know, go back to the ASX 200, certainly because you know, the X20's got through to new highs where the ASX 200 hasn't yet. So here's the X20 won't have these financials in it, which has probably been the strongest sector. So I just use QFN as an example. It's an ETF that just covers the financial sector, and you can see, you know, it's rallied incredibly strongly from those tariff lows. So it's up, you know, 27% from those lows. It's pretty incredible, especially considering, I think, what our economy is, which is quite lackluster at the moment. So we're back, you know, there's a bit of selling here now, and I expect some volatility into the end of financial year. Resources doing absolutely nothing. I mean, this chart looks all right, but the problem is, if you look on the weekly chart, which is down here, you know, it's pretty much still in this downtrend. And what's holding us back? Obviously, gold's been really good, but just look at BHP and Rio, and these, you know, this is a significant, I think it's probably like 50% of the QRE index. Look at BHP. That's pretty much the QRE index there on the weekly. and just on the daily, it just can't get out. And then you've had 3 big days of selling to close the week. I mean, Rio, the only thing worse than the BHP chart is the Rio chart. Still that solid downtrend on the weekly. I mean, look at this relentless selling. I'm not sure what's been going on here, but that looks really sick. I mean, that's something you definitely don't want to see in one of your holdings, and that's what's holding back those big resource, the resource indexes and whatnot from really moving out here. I mean, just Rio just looks terrible. Aussie dollar, US dollar, so obviously it's important because, as I said, a lot of our ETFs are unhedged. So it means if the Aussie dollar appreciates here, you're going to lose some value on the bulk of these ETFs at the moment with international exposure. So at the moment, it looked like the Aussie dollar was starting to firm, but yeah, just couldn't get going at the moment. I think there's a greater likelihood of the US dollar rallying here, which will then put the Aussie dollar back in the box again. But yeah, certainly the US dollar, big downtrend here. No one wants the US dollar. No one wants the US dollar. Well, it's not unlike what we saw with oil. That's that kind of case where no one wanted it, and then it just rallied strongly. This week or in the past week. So beware of a potential spike in the US dollar in the coming weeks. But yeah, we'll also just talk about, there's oil, and that's exactly, no one wants oil. And then, we've had that war news, and in one day it was up. Well, it closed up 6%, but it was certainly up a lot more at the high there, and big volume has come in. For me, this isn't a bottom there. I couldn't say it's a bottom, but I would say that it's the first sign of some bottoming in oil. I expect to see something similar in the US dollar index, which will put, as I said, the Aussie dollar back in the box, particularly when we'll be cutting rates and our economy really isn't great. They'll be cutting rates in the US as well, obviously. NASDAQ here, once again, it's playing that up to previous highs. We're going to see some volatility, and I don't think it's the case that we're at this moment right here, we're about to start a huge new bull market. I mean, valuations are still really high. Not sure what the catalyst is to move the broader indexes. I think individual stock pickers could probably still do well, particularly if the market doesn't sell off but just chops. But for the main indexes, and that's where a lot of these ETF exposures are, I think we're going to see what we've seen on the stocks and what we in Europe, and what we've seen in the examples that I showed. When we've had previous rallies of this magnitude, V-shaped rallies. So here's S&P, same kind of story. There's previous highs, approaching those previous highs, and I think we're likely to do a bit of chop. There's, once again, the Euro stocks, top 50 stocks in Europe, and there's our chop starting now, and we'll just see what moving averages it holds. At the moment, it's holding that 50-day moving average. If it can form a bit of a consolidation within here, maybe it can do something later in the year, but this could take, it's going to take weeks, maybe a couple of months. So keep that in mind. Volatility will certainly increase. Here's Bitcoin. So this is probably the surprise package of this week. Just given, we've had this on our radar just because it had a really nice, there's the previous highs, really nice base. In hindsight, that was just too quick off the bottom. And you look in terms of the movement, it's about, 50% off the bottom. A little too much, too quickly, and that's why we now need this bit of chop. But what was interesting is that it sold off. So we'll just zoom in a bit closer. It sold off there on the war news in the Middle East. So it's held that 50-day there, sold off to the 50-day perfectly, recovered. Is now just chopping out. So this is, to some extent, a bit of a guide, I think, to what we will see with the rest of rest of the indexes at the moment. So yeah, there's your previous highs. There's your 50% rally. Just going to chop, but I think it's certainly one to still have on the watch list, and I'm still pretty excited about Bitcoin going forward. And this is one of the better charts in the market, but here just needs more time. But yeah, keep your eyes peeled. Once again, oil, big mover this week. This to me is not a bottom yet, but it's a bottoming process, and yeah, it's certainly been a big underperformer over a long period of time. So with issues starting to raise their head in the Middle East again, yeah, certainly potential for oil to increase, but this, yeah, still a lot of resistance that it needs to move through, and this is too sharp a move. It's going to have to back and fill until it can form a bit of a base. So certainly interesting data point to keep our eye on. Gold now, another winner from the Middle East news and just the global instability at the moment. So this, I thought, was starting to fail, but it's actually setting up really nicely, and that looks like a really good base. So I mean, it's had a huge run, but the news is just, so here's 2025, there's 32% in the gold price. So the news is just too good for this at the moment. So it's in trend. I mean, yeah, it's kind of hard to buy up here, but it's in trend, so you're better off buying that than something like oil or BHP or Rio. You want something in uptrend. It's going to be a lot kinder, more likely, closer to new all-time highs. Yeah, so you can't fault that at the moment. Here's GDX. So this is gold stocks, and yeah, once again, it's following that gold price. Yeah, pushing out new all-time highs there on Friday on that news. So that's not a bad base for something that's in trend, and yeah, could certainly move higher from here. So as I said, pretty hard to buy given the rally it's had, but it's in trend. There's 56%. Can it still move another 10, 20, 30, 40% from here? Certainly possible. Anything's possible in this environment, and with something that's in a really nice trend. Another area that's in trend is defense stocks. This is Armour, ETF listed in Australia. So you can just see this is an example of something that's in trend. Just sells off, supported, sells off, and there's your news on Friday. So look at that for a return in an ETF, thematic ETF, 41%. And this is usually pretty rare if you look on the weekly, when they finally listed an ETF at exactly the right time, and that's up 57% from when they listed. Usually when they list the ETFs, it's the sign that the theme is topped out, but they're certainly moving on things a lot quicker in the ETF space. So a prime example, listed it at a point where it's a very good buy and it's done very well. So this is in trend. Unfortunately, it's going to continue to move higher with the current news. Here's another one that we were able to catch fairly recently. So this is video game ETF. So even though it's been a huge performer, and you have a look on the weekly, so this is probably the base 20, so around August 2024, and it's up 86% over that period. So incredible. It just shows you what thematic ETFs and why I'm so excited by some of these thematic names. And this is well and truly in trend. And what the tariff correction did was provided another buy point for us to get in. Probably not unlike what we're seeing in GDX at the moment. And yeah, it's just crept out. One of the first things to recover back to highs post the tariff news, and yeah, it's obeying those moving averages and just creeping. So this is in trend, a very nice ETF, and yeah, can it go further? I mean, video games and esports don't seem to be affected by tariffs, and certainly going to be a growing space with AI and whatnot going forward. So here's just to confirm that it was actually, even in the US was holding up as well. So the same video games and esports ETF exposure, and I mean, this probably shows it even better coming out, and just those green bars settles into the moving averages. green. Just look at that back-to-back buying. Pretty incredible. That's a prime example of something in trend, continuing to move in trend. So here's the Nifty 50. So we've been looking, this is the India. We've been looking at this. India, probably the fastest growing global economy at the moment. Really nice base. One of the best performers out of COVID. So here's on the weekly chart down here, and you can see that's the base we're looking at. It's probably a bit sharp from the lows, and that's why it's chopping around here, like what we've seen in Bitcoin. There's a previous high, so that'll have to be taken out eventually as well. But this is kind of like we're buying it in the middle of the base, getting in a bit early, a bit of a cheat entry, but I think well worth looking at. And this is a prime example as well about ETFs and our time zone and trading different international ETFs from Australia. But we can see here on Friday that when the Indian market did open up, I think it was down, let's say, there's a previous close, so it was down, just try and get the ruler, it was down about 2%. And we can see, the Indian ETFs in Australia, so this is one example, in NDIA was up 1.27% to close on Friday, and Green was off 1.5% to close on Friday. So that was because, the Indian market opened weaker, but it actually, closed. So it was only down, 0.68%. It's pretty much holding that 20-day moving average. So we'll have a look also at the 500. So this is a bit broader, top 500 stocks in India. And this is probably one that looks a bit more like what we can see in Grin, the ETF exposure in Australia. But I mean, this is a really nice base, and it's a lot stronger than the Nifty 50. And I'd probably expect this one to go first. I mean, it's certainly moved out, just sold back in. That base looks better on the weekly as well. Obviously, it's got these previous highs to contend with, but same kind of story. Opened lower and recovered back above that 20-day moving average, only down 0.61%. So what I want to see from India, because this has been one of our key ideas as well, is for that to recover pretty quickly this week. Some buying to come in. We don't want it to linger or certainly weaken, because I think the risks are heightened now with the Middle East news and pretty much all these global indexes in the V-shaped rallies. So to confirm the strength in India and this being a key idea, we want to see them have a pretty strong week, or certainly get some buying very soon. So the green has been our top idea as how to play India, and there's new all-time highs this week, sold off. This should open back around that kind of 2150, and then we'll just see what happens this week with the Indian market, which way it's going to go. But pretty, being at new all-time highs for an ETF, which is pretty recently listed. But if the Indian market's going to work, I think this is going to be a key idea. China A50, not showing a whole lot. So here's on the weekly. China being a big underperformer. There's the news that the government was going to start supporting the economy with stimulus, and now it's just in this big base. So not showing us anything at the moment. The key way to play China and Asia at the moment is certainly the Hong Kong index and the stocks that are listed in Hong Kong, the Hang Seng. So you can see this base looks really constructive as well. So this is another key idea. It's going to be a growth engine of the future, and valuations are still, really quite cheap in terms of, compared to the rest of the world. So that looks like a really constructive base, and it's chopping around from previous highs. So we'll see how that plays out. It's going to need another couple of weeks, another month. We certainly want to see it. It's held the 50-day. It's holding the 20-day. We'll see how it plays out this week, but certainly want to see signs that it is holding these moving averages and wants to go higher. And certainly looks quite constructive. I mean, there's selling there. There's a lot of buying there. selling's quite low volume. There's been good buying from the lows as well. So this looks really good. Look on the weekly. I mean, that's pretty incredible kind of base forming. Obviously, it's been volatile, but it's moving out. So key idea, you don't want to miss it. One of the ways to play it in Australia is Asia, and you can see this is Asia ETF, and you can see tracking pretty much what's happening. We did have kind of marginal, so where did it get to? 1148, so it's kind of got above, whereas probably 1162 is actually the previous high over here. So very, very close. But yeah, it's just showing it's got to work through that previous high, maybe a bit more chop, but that looks pretty exciting. IAA, which is Asia Top 50, actually did move out into new all-time highs, which is pretty incredible. So got through this resistance, sold back in. So we'll see how that reacts here. But the thing with IAA compared to Asia, so IAA has 25% of this, so 1/4 of this ETF is Taiwan Semiconductor, while in Asia it's only 10% of the exposure. But you can see here, semis are kind of back in vogue. So obviously Nvidia being the big player, but Taiwan Semi is still a really important name in semiconductors. And you can see there's your tariff lows, and there's your rally from the lows. And coming up to those previous highs, going to have to chop around, but pretty incredible. Yeah, incredible action. And that's a move of about 62% from the lows. So incredible action. See how that plays out, but that's going to weigh, as to the strength of this, is going to weigh on IAA and what happens there. So maybe Asia is going to be the way to play, but just have a look at semiconductors as well. This is semiconductor index, and this is certainly lining up for us to potentially play later in the year. So this is one that we can buy in Australia, semiconductors, and you can see looks a lot like Taiwan Semi. Needs more time. Just look on that weekly there. It's going to have to work up here and then probably do that. So we're probably looking at later in the year, but that looks pretty exciting. But yeah, the leaders will go first. So maybe Taiwan Semi or Nvidia will start moving out first. Here's another key idea that we'll be keeping an eye on. Needs a bit more time, and it's obeying that kind of V-shaped rally. Needs to chop, but this is hack. This is for the future, cybersecurity. I mean, it's holding here really well, and even on Friday, it was pretty much flat. So that's your 20-day moving average. So we'll just see how it chops around here. But that's probably a couple of weeks away from really looking very good to look at adding to the watch list and for a potential buy. Here's food. This is basically soft commodities and agriculture. So kind of been a bit of an underperformer there on the weekly. Hasn't done a whole lot. This is going to be a key area, and this is why it's important, because there's your tariff lows, and look how quickly it's rallied straight back up. And now it's doing that chop, so it's shown a lot of strength out of those tariff lows, and there's your kind of weekly base, very sharp rally from the lows, and that's probably why it's doing this bit of chop now before it can finally start to get going. But looking in the US, this is one with kind of very similar exposures, veggie, but not available in Australia, but the same theme, and this is actually on Friday, it was slightly up 0.16. And you can see there the weekly base looks a lot more constructive. And look, food's going to be one of our top ideas this week as well. Where are we up to? Food. Atom, which we spoke about last week. So Atom is the global atomic energy play ETF. So not just uranium, it's going to include the energy providers as well who are using and people who are supplying to the nuclear facilities as well. So This is why it needs to be on your watch list. Look at that rally from the lows, incredible strength from those tariff lows up into kind of new all-time highs and really quickly. So this was on our list last week, but it kind of moved out because we were closed on Monday and it moved out really quickly. My hope is, given that is such a sharp rally from the lows, that we do get that kind of chop and it comes back into 18. And that's potentially where we will start to look at that for subscribers, and we'll be giving alerts at the time. But something with that kind of strength, you've certainly got to have on your watch list. So this is compared to uranium, which is the other way to play it, URNM, BetaShares uranium, and you can see just nowhere near as strong. So this is just uranium miners and nowhere near highs, still chopping through. So yeah, that comes down to, if you've got a theme, you've got to choose the right ETF, and that's basically what we're here to do for subscribers. And then in terms of our final few ideas, I won't be sharing them on this video because they're for subscribers, but I'll just cover and blur out the charts. But you can see here, this is one of our key ideas we spoke about recently. But we're going to blur it out, but that looks really good and is starting to move in trend. So this is really exciting in a market, a global market, which isn't looking like it's doing a whole lot. Here's something that's starting to trend and coming out of a really long downtrend as well. And here's also another way to play it. This is another example of a US, same kind of exposure, and just shows you it's actually up. So it opened lower and finished up near recent highs, pretty much. What's that going to be? 6 month highs on a really tough day on Friday. So showing a lot of relative strength, and we've also got a new way to play that in Australia. And this is actually a really well managed ETF. So this is an active ETF, but in that climate change space. And you can just see on the weekly, they're doing really well. And now if this theme starts to play out, I certainly want to be playing both these ETF options in Australia. So and that's in a really nice base. And as I said, with that strength we're seeing in that theme, if you've got a good active manager with their eye on the prize, I think this could be a big winner as well. But we're not going to disclose the name. That's just for subscribers. So just in summary, I don't think you're going to see a whole lot in the main indexes, the ASX 200, your NASDAQ, even Europe's already starting to correct. So just going to be no action here. We're just working off those V-shaped rallies. But if you got the eye on your prize, there are some really good themes that you can play with ETFs from Australia, where I think there's a lot of upside. And that's basically what we're doing for subscribers. So I hope that gives you a good rundown. A little bit long today, but yeah, I think there's some good things to cover, some good ideas, and I'm hopeful of a really good week. But as I said, expect a lot more volatility to finish out this month.